All right, hi everyone. Welcome to today's live analysis session brought to you by IC Markets. All right, hope you all had a great weekend, and let's start off the new trading week with a bang. All right, before we dive into the chart and trading view, let's quickly take a look through the disclaimer. All right, take note that this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for the transactions in financial instruments. Also, take note of the risk warning that comes with trading forex and CFDs. They carry a high level of risk to your capital, and you should only trade with money you can afford to lose. Right, my name is Ketan Rameshchandra. So this webinar series is brought to you in a special partnership between IC Markets and Everest Fortune Group, where we have been the finalists for Best FX and Equity Research for the following years, 2019, 2020, and 2021. All right, there's quite a few things on the calendar for this week. I just like to point out three of them. Right, we've got flash PMIs out of the US on 24th of July, Wednesday. We've also got the Bank of Canada releasing its monetary policy statement, as well as delivering a press conference on the same date. And on Friday, we wrap things up with the US PCE price index. This is an inflation gauge. This is actually the Federal Reserve's preferred gauge of inflation, and that's out on this Friday. So naturally, inflation-related data is definitely going to have a huge impact on markets as well. All right, so this is the calendar from Forex Factory. Take note, I'm on GMT time here. So today it's a pretty much, it's actually a quiet day with regards to the calendar. And tomorrow, things get a little bit more exciting with existing home sales and the Richmond Manufacturing Index out of the US. We've also got, of course, flash PMI data for manufacturing and services for France, Germany, the wider Euro area, United Kingdom, and of course the US as well. That's out on Wednesday, 24th of July. And of course, we've got the Bank of Canada that's expected to cut its interest rates once more. This would mark the second consecutive rate cut, for this central bank, right? They already cut in June. They already cut 25 basis points in June, and they're expected to cut another 25 basis points as well, right? In July, sorry. So that's going to bring it down from 4.75% down to 4.5%. And we've also got GDP data out of the US on Thursday, 25th of July. And of course, we have the PC's price index that's out on 12:30 p.m. GMT on Friday, the 26th of July. Now, looking at the flash PMIs forecast, we are seeing manufacturing expected to expand with a reading of 51.6, while the services sector is also set to expand with a stronger reading of 54.5. Right, so on the charts here, on the left I have the chart for manufacturing PMI, and on the right is for services. Now, a reading above 50 indicates expansion. This is what we've seen for the manufacturing PMI. Take note, this manufacturing PMI report is released by the S&P Global Agency, and we can see that since the beginning of this year, the manufacturing sector has expanded over the last 6 months, right? So it's pretty decent level of activity for the manufacturing sector. Now, looking at the services, it's been in expansion for well over a year, right? The reading of threshold of 50 currently sits over here. You can see that it has rebounded very strongly for the months of May and June as well, right? So we can see here, although the latest forecasts are expanding, indicating another month of expansion, it is at a slightly lower rate than the previous month, right? Well, manufacturing is expected to come in at the same reading or the same level of 51.6, whereas the services sector is just showing a slight moderation lower from 55.3 to 54.5. Nonetheless, we're expected to see the US PMIs report another month of robust economic output for the manufacturing and services sector, right? So this is the composite PMI, which is basically the blend or the mix between the manufacturing and services, and you can see that it's been in expansion for more than over a year as well, especially with reports for May and June showing a sharp acceleration in overall economic output. Right now, should we see a strong PMI reports come Wednesday, 24th of July, this is quite likely going to function as a pretty decent bullish catalyst for the dollar. So take note, stronger than expected PMI readings are quite likely to lift the US dollar come Wednesday, 24th of July. Now, moving over to to their neighbor to the north, we've got Canada that is going to release its monetary policy statement on Wednesday, 24th of July at 1:45 p.m. GMT. Right, as mentioned earlier, they're expected to move ahead with a second consecutive rate cut to bring it down from 4.75% to 4.5%. They already made the first 25 basis point cut in June, right? And it's quite likely we're going to see a second consecutive rate cut here. And then after that, 45 minutes later, we have the press conference by Bank of Canada Governor Tiff Malcolm as well. Now, if we, as well as markets are already expecting a potential second consecutive rate cut, and should we see a very dovish outlook by Governor Tiff Malcolm, this is quite likely going to cause the loonie to come under significant selling pressure. So that means the currency pair dollar CAD is quite likely to see a strong boost following this rate cut announcement. Right, and also take note the press conference as well is going to be highly critical. If the communication is construed to be very extremely dovish, we can expect dollar CAD to receive a very strong boost at this point in time, or well, rather during the duration of the press conference. And finally, looking at the PCE price index, these are the monthly charts for PCE price index. On the left, I have the chart for headline PCE, and on the right, I have the chart for core PCE. Now, looking at the first quarter of 2024, we can see that headline and core PCE were rising very strongly on a monthly basis, right? With the headline hitting 0.4% growth month over month in January, while the core hit 0.5%. And then after that, we could see another 3 consecutive months of stronger or of higher prices on a monthly basis for both headline PCE and core PCE. Now we saw a significant taper off in May, right? Headline PCE was flat, whereas core PCE grew just 0.1%. So this was a significant tapering off in monthly growth for the PCE price index. Now the forecast for June points to the core PCE coming in at around 0.2%. Core PCE is expected to come in at around 0.2% growth, and the headline PCE is expected to come in at around 0.1%. Now, all this is quite clearly much lower than the readings that we saw in the first quarter of 2024. So should we see the PCE price index come in line with the forecast, right? This is quite likely to be considered as viewed positively by markets, in the sense that inflation is continuing to moderate lower, right? And that could probably mean we are likely to see the annualized readings probably stay around the same level, or perhaps even edge a little bit lower as well. So if we get another round of cool inflation data out of the US with regards to the PCE price index on Friday, this is quite likely then going to function as a potential bearish catalyst for the dollar, right? So take note, we may have a potential set of cooler data once more, and this could quite likely cause the dollar to sell off, and of course could provide a strong boost for gold prices as well. All right, okay, now let's dive into the charts and trading view, and we'll begin the analysis on the dollar index, of course, starting with the daily time frame, right? So here we are on the chart for dollar index daily time frame, and as you can see here, since the end of June, after hitting as high as about 106.10, the dollar index has reversed and dropped quite sharply, dropping as low as 103.65 last Wednesday, right? And then it staged a pretty strong rebound, right? It retraced higher on Thursday and Friday, but it looks to have stalled. Currently, it looks to have stalled at around 104.40 here, right? So looking at the dollar index here, so with the current candle pulling back once more, right? I see a potential pivot level here. This pullback support level at 103.65, and this is a pullback support level here, which found support last Wednesday and Thursday. So this is where the pivot for today has been identified, right? Especially with the current candle in the red, right? It's closing down. Remember, this white candle here represents a down day and is potentially pulling back a little bit further. So today's analysis, today's pivot now has been identified at this pullback level at 103.65. Now, in terms of support, I see a nice pullback support level that's taken place here on 21st of March at 103.24. So this is the first support for the dollar index. And when we run a Fibonacci retracement, starting from this swing low here on 8th of March, going up to the high here on the 16th of April, we can see that the 78.6% retracement level aligns very well with the first support. Now, with this downtrend here that's been in place since 28th of June, we can also run a Fibonacci retracement now from 28th of June down to the low of last Wednesday. Right, let's pull up all the fibs. We can see that there's a pretty decent pullback resistance level here at around the 50% Fibonacci retracement. There's also another pullback level here close to the 38.2 as well. Right, you can see here back on mid-June, dollar index pulled back to around 104.70. Of course, the bottom of this wick goes as low as 104.20, but generally you can see here this level did function as a pretty decent pullback support level before rising higher. So we do have a pretty decent intermediate resistance level here at around 104.68, which also has the presence of a 38.2% Fibonacci retracement. And then I see a nice pullback resistance that's taken place here on 9th and 10th of July at around 105.15, which also has the presence of a 61.8% retracement. So that's where I would identify the first resistance here. Now, let's just keep 38 and 61, and we can get rid of the other retracement levels here. Right, so we can see, let's just highlight the 38.2% and highlight the 61% as well. Right, so after retracing higher on Thursday and Friday, the dollar index looks to be selling off once more, and it does look like it's going to drop towards this pivot level here. So it could potentially find support once more and stage a minor rebound of this pivot level here at 103.65. Right, when looking at it here, I do see maybe there's a case for a bearish channel as well. Let's see if we can draw a pretty decent bearish channel. Right, perhaps yeah, we could. You can argue there is a pretty decent case for bearish channel. We see 2 touches to the top and about 2 touches here to the bottom as well. So we have a pretty decent bearish channel for the dollar index as well to highlight the ongoing downtrend as well. Let's look at the Ichimoku cloud. Okay, the cloud here. Just let me adjust the settings a little bit. Maybe this is a bit more clearer. Yep. So you can see here the bearish Ichimoku. Okay, the cloud is still not that clear. Just give me a second. Yep, there we go. This is much better. Okay. So you can see here the dollar index is trading underneath the bearish Ichimoku cloud, is trading within a pretty decent bearish channel as well. And of course, we can see a series of higher highs and higher lows as well, which give us a really good indication that we really are in a pretty strong bearish downtrend for the dollar index. Now, it could potentially, looking at the current price action for today, it is pulling back as we speak. It could potentially fall back towards this pullback support level here at around 103.65, which has been identified as the pivot. All right. Okay. So these are the key levels for the dollar index on the daily time frame here. Now let's fine tune the analysis and look at it on the 4-hour time frame. Right. So let's see if there's a need to fine tune the analysis here. Now, looking at it here on the 4-hour time frame, we can see the dollar index has come close to a pretty strong pullback resistance that took place on 16th of July. There's a pullback resistance at 104.43. Right, and last Friday, as the dollar index retraced quite higher, we had the combination of this pullback resistance at 104.45, as well as the presence of the bearish Ichimoku cloud, both of which were highlighting a significant resistance area here. So that means as the dollar index was rising strongly on Thursday and Friday, because we have identified this pullback resistance at 104.44, and we can also see that there's a presence of a bearish Ichimoku cloud. This would have been telling us price is approaching a pretty significant resistance area. So that means any potential take profit level should be ideally identified just underneath this resistance zone here. Right, remember, if we had gone long on the dollar index last Thursday and Friday, right, and when you see a strong resistance area as being identified by the bearish Ichimoku cloud and the pullback resistance at 104.40, you should ideally be identifying your take profit level slightly below this region here. So let's just see the take profit at pullback resistance is at 104.44. So by giving yourself a 10 pip buffer right just underneath it, so placing the identifying the take profit level at around 104.34 would have been a pretty decent level to do so, right? To identify a take profit level for the long dollar index trade. Now, of course, with price having reversed off this level last Friday, and it does look like to be falling lower, right? It does look like to be falling lower back towards the pivot here, right? It does look like it's falling back towards the pivot here. So should you have any short entries for the dollar index, right? Take note, you can identify your take profit level close to this pivot level at 103.65. Right, so anywhere between 103.75 and below would probably be a good idea to identify your take profit level for any short dollar index trades as well. But before that, I would also like to highlight I see another pretty decent intermediate support level at 104.04. So ideally this should be your first take profit level here, right? Take note, I see a nice pullback level that's been in place since the 3rd of June, right? So this level here is at 104 is our first take profit level for the short dollar index trade, and the second take profit level is just above the pivot here. Remember, so it's just dollar index has reversed off this pullback resistance and the bearish Ichimoku cloud. So to identify your stop loss level, right, a suitable stop loss for this short trade would be identified slightly above the top of this wick here, right? We can see here the top of this wick coming as high as 104.42. So identifying your stop loss at about 10 to 15 pips above this pullback resistance here would be a suitable stop loss level to identify, right? So once again, with dollar index reversing of this resistance level, there's a good opportunity that it's going to fall even lower. So that means for any short dollar index positions, right, your stop loss should be ideally placed slightly above this pullback resistance that occurred on 19th of July, Friday. Your first take profit level is going to be identified at this intermediate support level at 104. And of course, the ultimate take profit level is going to be identified slightly above the pivot. The pivot sits at 103.65, so you should be looking to target at least about 103.75 and below. Now, looking at stochastics and RSI, we did see the stochastic and RSI indicator indicate overbought conditions last Friday as well, right? Last Friday, 19th of July, we did see the RSI and the stochastic indicator indicate potential overbought conditions, which means price is likely to stall, which is what happened as well. So we had a combination of the pullback resistance plus the bearish Ichimoku cloud. Both of these highlighted a strong resistance zone, and at the same time we saw RSI and stochastic both indicate a potential overbought conditions, which means that the dollar index was quite likely going to stall and reverse to drop lower, which is what has exactly happened, right? So with dollar index pulling back, and should you have any short trades for this instrument, take note, stop loss should be placed above this high on the 19th of July. Give yourself about a 10 or 15 pip buffer. First take profit level is going to be identified at 104, and the ultimate take profit level is going to be identified slightly above the pivot, which sits at 103.65. All right, so these are the key levels for the dollar index on the 4-hour time frame as well as on the daily time frame too. All right, now let's take a look at gold as well. We'll take a look at gold, and then we'll come back to the currencies once more. Right, so looking at gold here, right, so if we expect dollar index to fall, right, we could potentially see gold prices remain above this pivot level here. We can see a pivot level has been identified at 2,389. Right, previously this level functioned as resistance here back on 7th of June, functioned as resistance once more at the beginning of July, and then it looks to have functioned as a pullback support on 12th of July, and once again it looks like it has formed a pretty decent functioned as a pretty decent support level last Friday as well. So this creates an overlap level here at 2,389, which has been identified as the pivot. So what we are looking for is a potential bounce of this level or close to this level here and then we could potentially see gold prices climb higher, especially if the dollar index continues to fall lower. Remember, the dollar index and gold prices typically share an inverse correlation or a negative correlation. So that means when the price of the dollar index is rising, gold prices are usually falling. And conversely, when the value of the dollar index is falling, gold prices should generally be supported as well, right? So take note, we may have a condition, a scenario where you could see gold prices stay above the pivot and then resume its uptrend as well. We can see it's been in this pretty decent uptrend since the end of June as well, right? Finding support at around $2,294 per ounce and making this new all-time high on the 17th of July at $2,485 here. So quite clearly, this pullback resistance level here is where the first resistance for gold sits at, right? And we have a potential bullish bounce opportunity for this week as well. Now, there's also a pretty decent ascending trend line that we can draw here. We can see this ascending trend line has been in place since 27th of June. We can see gold has bounced off this level several times and is indeed testing this ascending trend line as we speak. So we're at a pretty critical juncture here, right? If we do see a clean break through the ascending trend line and through the pivot, that means it's going to be a big shift in momentum. So this bullish uptrend is quite likely this bullish momentum here that we see since the end of June is quite likely would have naturally been shifted to the bearish momentum here. Remember, take note, this the combination of this ascending trend line and this pivot level here, which is an overlap support. If price breaks through both of these levels here, we're going to see a potential shift in momentum, and that could mean we could see gold prices slide even lower and drop towards the first support or close to the first support, which is at $2,292 per ounce. Now we can also I think try and run a Fibonacci retracement. Let's try running a retracement from this low here, 14th of February, going up to the all-time high on the 17th of June. Let's pull up all the fibs. We can see that the 38.2% retracement aligns very well with the first support, and we have the 23% just slightly below the pivot here as well. So let's just keep 23 and 38 and just highlight this as a zone here as well. Right, so take note, this ascending trend line is pretty critical, right? A clean break below this ascending trend line and through the pivot as well is going to indicate a potential significant shift in momentum, and that could mean we could see gold prices slide lower. But for now, I think it's quite likely going to stabilize around the pivot level here and the ascending trend line, because as we see gold dollar index pulling back quite strongly today, right? And if dollar index continues to lose value, it's quite likely we may see gold prices being supported and potentially stage a rebound here. So if we do see a nice rebound here, right, you can target the vicinity of the first resistance as your potential take profit for any long gold positions, right? So targeting around $2,460 per ounce is a suitable area to identify your take profit for any long gold positions. Conversely, if we do see a bearish breakout occur, right, if we do see a bearish breakout occur, then we can target the intermediate support level here, right? There's a pretty decent pullback level at $2,357, right? We can target identify the first take profit level for any short gold trades at around 2,357, and of course the ultimate take profit level would be close to the first support at 2,292. So targeting $2,300 as the ultimate take profit level for any potential short gold trades would be a suitable zone to do so here. Right, so these are the key levels for gold on the daily time frame. Now, of course, with the first resistance at sitting close to the all-time high, how could we possibly identify the next resistance level? In this scenario, we're going to rely on a Fibonacci extension tool. So in this case, we're going to switch over first to the weekly time frame, and you can see here there's a pretty strong downtrend that's occurred from here, 20th of May down to 3rd of June. So to find extension levels, we need to run the retracements. We ran the retracement starting from 20th of May down to 3rd of June. Key extension levels sit at 127 and 161%, and we can see the 127% sitting quite close to the top of this wick here as well. So that's where the first resistance is, right? It's a pretty strong resistance zone here, and we can use now the extension at 161% to identify the second resistance, right? So that's how we can use the Fibonacci extension to help us identify the next potential resistance area. That could be at 2,550 at 0.94. Now coming back to the daily time frame, right? So in this scenario, remember this level here at 2,495 is the all-time high for gold prices. We have nothing that we can reference from the past. There's no swing high resistance, pullback resistance, or the overlap. So in this scenario, we have to rely on Fibonacci tools such as extension to identify the second resistance here. Now let's move on down to the 4-hour time frame and see if there's a need to fine-tune the analysis. Right, we can see that gold is still trading above the bullish Ichimoku cloud, right? The cloud is green in color, and the bullish Ichimoku cloud itself can be an area of support as well. So not only do we have a pretty decent ascending trend line, we have an overlap support, which is the pivot. We also have the presence of a bullish Ichimoku cloud, which itself can function as a pretty decent support zone. And when looking at the RSI and stochastic, they both seem to indicate oversold conditions. So all the more reason to think that we may see a potential bounce for gold prices this week, or at least for today as well. Right now, looking at a similar technical setup, the last time we saw RSI and stochastic oversold at or indicate oversold conditions was back in 26th of June. You can see here RSI dropping as low as 31.45, stochastic dropping as low as, what is this here, 6, right? We did see gold prices stabilize around $2,300 per ounce before staging a pretty decent rebound. So technical setup on the 4-hour time frame looks pretty similar as well. We do see RSI falling as low as 32.9, stochastic dropping as low as 6.7. We do see the bullish Ichimoku cloud offering some support, the ascending trend line, as well as the pivot level, all of which combining to identify a pretty significant support zone, right? So we may see a nice potential rebound for gold today, right? Okay, so these are the key levels for gold on the 4-hour time frame as well as on the daily time frame. Now let's come back to the currencies. Let's take a look at dollar CAD, right? Since we've got the Bank of Canada going to release its monetary policy statement on Wednesday, we could see the loonie come under heavy selling pressure. So that means this currency pair, dollar CAD, is quite likely to rise even further this week. Now, looking at the chart now, daily time frame, there's a pivot level that's been identified at 1.3777. This is actually a strong pullback resistance level. We can see dollar CAD running the resistance at 1.3777 at the beginning of May, and then again in middle of June as well. So with price rising strongly, right, this could be a good, this pivot level here could be a good area to identify your take profit level should you have any long dollar CAD positions, right? So close to 1.3777, right? Or maybe from 1.3767 onwards would be a good zone to identify any potential take profit level for your long dollar CAD positions here. And of course, if that rate cut does materialize on Wednesday, combined with a very dovish press conference, we are quite likely to see dollar CAD rise even further and maybe even break above this first resistance here, which is a multi-swing high resistance, right? The first swing high resistance took place here in mid-November 2023, and the second resistance here took place in mid-April 2024. So quite a significant resistance area. And we have another swing high resistance slightly higher that took place at the end of October as well. So take note, if we do see the Bank of Canada move ahead with its second consecutive rate cut combined with a very dovish press conference, this currency pair is likely to move even higher. So it may even potentially break above the pivot, right, which is the pullback resistance level, and hit the first resistance, which is a multi-swing high. So your first take profit level should be identified at around the pivot. Second take profit level should be identified around the first resistance, right? Should we see this strong bounce since mid-July continue as well. You can see a price formed a nice bottom here at around 1.3612 back in middle of July, and it has bounced quite strongly as well. Now, not only this level at 1.38 31 is a strong multi-swing high resistance, it also has the presence of a 161% Fibonacci extension. How did we find this extension? Right, we found it by running a retracement starting from here, this high on the 2nd of July, going down to this low here on the 11th of July. Right, we can see the 161% Fibonacci extension aligns pretty well with the top of this wick here that occurred on 10th of November 2023. Now, okay, this retracement now is no longer valid, so let's get rid of that. That's fine. And okay, this support here is a pretty decent pullback support that occurred on okay, this is, I would probably identify this maybe as an intermediate support level here, at an intermediate support level here at 1.3666, and where I do see a really strong support level is at this pullback level here at 1.3596. Okay, so on a daily time frame, I do see a strong pullback support level here at around 1.3600, and then pretty decent intermediate support at 1.3666. Now, of course, with demand for with the loonie looking very weak, and with a potential rate cut coming up on Wednesday, this currency pair is quite likely to climb even higher. So take note, first take profit level can be identified around the pivot, and it may make an even slight pullback. However, there's a pretty good chance we may see the dollar CAD break above the pivot and also target the first resistance as well. So the second take profit level can be identified at around the first resistance. Now let's just look at it on a 4-hour time frame. I think this is pretty fine, right? If anything, I'll just identify this swing high resistance that occurred on the 2nd of July as a potential intermediate resistance level. And this is a pretty decent intermediate resistance level to identify, and then we could potentially see it reach the pivot here, which can be used to identify as your first take profit level. All right, okay, so these are the key levels for the dollar CAD. Right, now let's take a look at the euro. Right, and of course, should you have requests for any other currency pairs or commodities or even the indices, please do drop them in the chat box, and I'll be more than happy to go through the analysis with you. Now, looking at the euro, right, after finding a pretty decent support here at 1.0680 in mid-June, it has rebounded quite strongly as well, right? Of course, with dollar index topping out at around 106.10 around the same period and falling sharply, right? We're going to obviously expect the euro to be climbing strongly over that same period as well. And it has run into resistance at exactly this swing high that has taken place, right? There's a swing high resistance in the middle of March here, very significant swing high resistance, and in the same area where the euro has once again stalled last Wednesday as well. So as the euro was rising strongly last week, right, and by looking at this swing high resistance here, I would have identified this as to be as a major barrier. So that means I would have identified my take profit for any long euro positions at around this swing high resistance as well. And this is where exactly this currency pair did stall and reverse quite sharply on Thursday and Friday as well. So quite clearly, the first resistance for the euro sits at 1.0949, right? And it's more of a zone, right? Especially with the top of this wick coming as high as 1.0980. And of course, the second resistance for the euro on the daily time frame is this swing high that took place at the end of December at 1.1104. Now, we can also probably use a Fibonacci extension here. So let's find a potential extension by running a retracement from 4th of June down to 26th of June. We can see that the 127% extension level aligns pretty well with the top of this wick here, and 167 sits there. It doesn't really align well with the second swing high resistance, so that's fine. Let's just keep 127%. Right, if the Fibonacci levels do not align with a significant resistance area or significant support area, that's fine. Do not force a Fibonacci retracement or Fibonacci level onto our analysis if it doesn't matches or if it doesn't line up with a significant resistance area such as this swing high resistance here, or with a significant support area as what we see here, right? These are significant support areas here, another significant support area here, another swing low here, another significant swing low here, right? You can see these are very significant swing low bounces here. So these are critical support areas, whereas these are critical or significant swing high resistances here, right? So once we identify the significant swing lows and swing highs, and when we run and then when we incorporate Fibonacci analysis into our charts, it should ideally line up with these significant supports and resistance. If those Fibonacci levels do not align with these significant support and resistance levels, that's fine, just leave them out, right? Use something that actually aligns pretty close to a significant resistance area. So in this case, we see the 127 extension aligned pretty well with the swing high that took place on the 8th of March. Now, what about supports? Let's take a quick look of how we can identify the potential support levels here, right? We can see this is a very nice uptrend for the euro, so we can quite clearly run a Fibonacci retracement from this swing low on 26th of June to the swing high here on the 17th of July. Let's pull up all the fibs. We can see now that the euro is currently testing the 23.6% retracement, so perhaps this is where I would identify an intermediate support level here that's been identified by the 23.6% Fibonacci retracement here, and it's also a level where we can see the euro find support last Friday as well, right? It dropped as low as 1.0875, but stabilized there, and today it looks to be stabilizing around this level as well. So this retracement that being identified by the this level pullback level that's being identified by 23.6% Fibonacci retracement could be a potential intermediate support level. Now I do see a stronger pullback, support level at 1.0800, right? This pullback support levels took place on 5th of July. And it also has the presence of a 50% Fibonacci retracement. So this is where I would identify the first major support for the euro. So in this case, we're going to be using the 23 and 50% retracement levels here. Right. So this intermediate support level here can also be identified as the pivot, right? Which, as I mentioned, is a pretty decent intermediate support level here, which also can be identified as the pivot. Now, if you expect dollar index to continue to drop lower, that means we can probably expect a pretty decent bounce for euro as well, right? So remember, if dollar index continues to fall, we may see the euro stabilize around this pivot level at 1.0883 and potentially climb higher as well. So we do see that rebound or bounce take place. We can then target the first resistance as your take profit level, right? So any potential long euro trades that we may have for today, right, if it bounces off the pivot here, we can target close to the first resistance at 1.0949 as a suitable take profit level here. All right, okay, now let's look at it on the 4-hour time frame. Right here on the 4-hour time frame, when we pull up the Ichimoku cloud, we can also see that prices, this currency pair is trading above the bullish Ichimoku cloud. And remember, the cloud itself can be an area of support as well. So not only do we have the 23.6% Fibonacci retracement, we have a pullback support level here that's been in place since 14th of July, right? There's a nice pullback support level here, and again last Friday. And now we also have the presence of this bullish Ichimoku cloud. So we have 3 factors that point to a significant support zone, and we could potentially see the euro bounce off this pivot level here. Now looking at stochastic and RSI as well, stochastic oscillator does seem to be indicating oversold condition with a reading of about 16.4. However, RSI is at around 44. It's around mid-range, right? It doesn't really indicate overbought or oversold just yet. So perhaps the euro could pull back a little bit further into the cloud, and where it could find support around here. And remember, the last time we did see both of these momentum indicators indicate oversold conditions was back in 26th, or was back on 26th of June. You can see here RSI dropping as low as 33.8, and stochastic eventually dropping as low as 14.4. We did see the euro stabilize very nicely at around 1.0675, and it staged a pretty nice rebound at the end of June. Now we're not seeing the exact same technical setup just yet, but we do see a strong support zone identified by the 23.6% retracement, the pullback support at 1.0883, as well as this bullish Ichimoku cloud. So there may be, of course, a little bit further pullback here, but if it manages to stay within the Ichimoku cloud and stabilize here, there's a higher probability that we could see the euro reverse and resume the uptrend once more, right? And especially if RSI and the stochastic oscillator indicate oversold conditions, right? If it starts to highlight oversold conditions, then it's quite likely we may see a potential floor for this currency pair, and we may see a nice rebound as well, right? So these are the key levels for the euro on the 4-hour and daily time frames as well. All right, now let's take a look at oil. Let's jump back over to crude oil, right? Since last Wednesday's 17th of July and Thursday, or rather the second half of the week, Thursday and Friday, we saw a sharp reversal in crude oil prices, with WTI oil hitting a high of $83.80 per barrel on Thursday before reversing sharply as well, right? So it's currently testing a pivot level here. Why was this a pivot level? Because previously, or rather earlier this morning, as markets open, XTI USD, which is the instrument that tracks WTI crude oil futures, was hovering above yesterday's last Friday's low and was retracing higher. So I had identified this pivot level here as a potential breakout level, is a potential bearish breakout level. So on the 4-hour time frame, it has closed beneath this pivot level here. So there's a pretty decent chance we may see this bearish momentum cause crude prices to fall lower here. Now coming back to the daily time frame first, right? So first resistance is very clear. It is this pullback level at $83.16 that occurred on 11th of July and of course to the 18th, right? Price, as I mentioned earlier, has just broken through a pivot level here, giving us some sort of confirmation for a bearish breakout. And the first major support for XTI USD is at around $77.40. And we see a nice pullback support level here, right? There's a nice pullback support level here on 11th of March, and we can see several times XTI USD has bounced off $77.41 once again, and even here we can argue there's a pretty decent pullback level that took place on 14th of June. So that means if we see XTI USD fall further, we can then use this first support here to identify a suitable take profit zone for any short XTI USD trade. So that means anywhere from about $78 onwards, right? $78 and below is where we can identify your a suitable take profit zone for any short XTI USD trades that you may have, right? And also we've run a Fibonacci retracement starting from this swing low on the 4th of June, going up to the high here on the 5th of July. We have the 61.8% Fibonacci retracement. It aligns very well with this pullback support level. Right, now let's look at it on the 4-hour. Let's look at it on the RS together with the RSI and stochastic, right? It doesn't seem to indicate oversold conditions just yet. The last time these two indicators indicated oversold conditions was on the 4th of June. We can see RSI dropping as low as 28.61 and the stochastic oscillator dropping as low as 7.8, and that's where we really saw XTI USD stabilize at around $73 per barrel here, right? We found a nice floor here at $73 per barrel and stage a very strong rebound. As of now, we don't really see these two momentum indicators oversold. These two momentum indicators highlight a potential oversold condition just yet. So perhaps there's still further room for this downside action to take place as well, right? Remember, this is where we saw significant oversold condition here highlighted by the RSI and the stochastic. We saw XTI USD find the floor at around $73 per barrel and stage a very strong reversal, right? But because we see RSI currently at around 43, and stochastic currently around 14 as well, right? We got a good chance that this downward momentum could gain further traction, right? So that means identifying your take profit level close to $78 per barrel for any short trades would be a suitable area to do so. Right, looking at it on the 4-hour time frame, yeah, I think that's fine as well. There's nothing else that I would like to highlight. Ichimoku Cloud, okay, nothing much here. All right, so these are the key levels for XTI USD. All right, before we move on and cover the US 500, I'm just going to launch a poll as well, and I truly appreciate it if you guys can give your feedback with regards to today's webinar. All right, here we go. Right, truly appreciate it if you guys can give your feedback with regards to today's webinar, and then we'll proceed on with the analysis for the US 500. Right, so the US 500 is the instrument that tracks the S&P 500 futures. You can see here it's made an all-time high at around 5,673 last week, and outside not last week, middle of last week, right, 17th of July, it made a all-time high at around this level here, and has proceeded to drop quite sharply in the second half of last week. It does look to have stabilized currently now at around 5,535, right? However, we may see this. So this, I think what I would do here now in this current scenario, I think based on looking at the current price action, right, there's a pretty decent overlap level identified by the 23.6% Fibonacci retracement, and we can see previously this level here functioning as resistance on 17th of June till the 1st of July, and after which it proceeded to function as a nice support last Friday as well, so thus creating an overlap level here, and this is a potential support area here. So I think the pivot now based on current price action should be identified at around 5,495, and the first support can be moved up as well. First support can be moved up towards this overlap level here, close to the 50% retracement. So let's keep 23 and 50% in our analysis, and we can just tidy up a few things here. Right, so take note, right, we're pretty critical juncture here for the US 500. Right now it does seem like it would go either way, right? Remember, this is a pretty decent overlap support level at 5,495, which is the presence of a 23.6% Fibonacci retracement. We may see we will need a little bit more confirmation to see a little bit more time to see how this level functions. We may, let's see if it on the stochastics here and RSI, right, both of which do not really indicate oversold conditions just yet. But yeah, let's see. It's this one here said it's a bit difficult. It's like in a bit of limbo here. We don't really know what's going to do. It does look like it has, because of the gap up. We see a nice gap up today. We may see this currency this index move a little bit higher. But take note, on the 4-hour time frame, I also see a nice descending trend line as well. So perhaps the bias for this instrument is still to the downside, right? Because we have a nice bearish descending trend line here. Perhaps we're going to see the US 500 stall around this level here at around 5,540, and then reverse to drop lower towards the pivot here. Right, so take note, we've got a nice descending trend line, which is much more visible on the 4-hour time frame. Now, of course, if we do see a clean break above this descending trend line, then that may mean we are likely to see US 500 push higher as well. So this may be a signal here for potential bullish breakout, right? The signal for the potential bullish breakout is through this descending trend line. And similarly, if we do see a clean break below the pivot, and we do see US 500 reverse underneath the descending trend line, then we may have a potential scenario for bearish breakout as well through the pivot. So take note, for now, it's pretty hard to decisively call a direction on the US 500 now. But however, we do have some technical indicators that we can rely on. this descending trend line is going to be pretty important as well. If US 500 reverses underneath this descending trend line, we may have a potential bearish breakout scenario at hand. The bearish breakout could take place through the pivot, and at the same time, if we do see a nice clean break above the descending line here, trend line, then we may have a case for a potential bullish resumption as well. All right, okay. Is there anything else you'd like to cover? Let me see. All right, we've covered. Okay, let's just cover the DAX. All right, let's wrap things up with the DAX. Right, we've covered U.S. equities. Let's just cover one of the European indices as well. So in this case, the D40 tracks the DAX as well. So let's take a look at that. So we can see here equity markets, especially the European equity markets as well. Specifically, the DAX looks to have seen a nice bounce today. Right, we see it opening at around 18,186. It's rising quite strongly. So I see a nice pullback resistance level here at 18,700. This resistance level has been in place since the 3rd of June. So that means with this instrument rising very strongly now, identifying your take profit level underneath this first resistance would be a suitable level to do so. Right, we may also use a Fibonacci retracement to identify the first take profit level. Right, we can run a retracement from here, 12th of July down to the low here on the 19th of July. Taking a look at the 50 and 61%, right? This could be your first take profit zone as well, right? Using the 50 and 61% Fibonacci retracements, we can use this boundary here to identify the first take profit level, which is around 18,500. And should we see the DE40 or the DAX continuing to rise higher, then of course we can then target close to the first resistance at 18,700 as the second take profit level as well. Now we can see prices reversed off this level here today at around 18,156. So because of that, I'm going to move my pivot up. We can see initially I thought we were going to see a further pullback earlier today, right? Especially with the strong move over the last week for the DAX, right? It was a losing streak for the DAX last week, so I thought I was expecting further downside action, and that's why I had identified the pivot at around 17,994. But it looks like the pivot is a little bit higher here, which is at 18,166. And then the first support can be moved up a little bit as well. There's a pretty decent pullback level here that occurred on the 30th of April, and the swing low over here that took place on the 14th of June as well. And we can also see there's a presence of 100% Fibonacci projection. This projection was found by starting from point 1 here, 16th of May, going down to point 2, 14th of June, and ending at point 3 on the 12th of July. And we can see that 100% projection level sits just slightly below the first support at 17,865. And when we zoom out a little bit more, we can see that this level here at 18,933 is the all-time high for the DAX that was formed in mid-May. And running a retracement from this swing low from last October to the all-time high, we can also see that there's a 23.6% Fibonacci retracement that sits with this pullback level here at 17,865, and also aligns quite well with the 100% projection. So this zone here does look like to be a very strong support zone. So remember now, with DAX rising strongly, you can identify your first take profit level that's bounded by the 50 and 61.8% Fibonacci retracement. So probably around 18,500 can be your first take profit level, while the second take profit level can be identified close to the first resistance at 18,700. All right, so before we wrap things up, just take note, we've got quite a few things on the calendar this week, but take note, we've got the flash PMIs out of the US on 24th July. We've got the Bank of Canada that will release its monetary policy statement and its press conference on the same date as well. And of course, we wrap things up with the PCE price index on Friday, 26th of July. So the Bank of Canada will release its statement at 1:45 p.m. GMT on Wednesday, 24th of July, where they are expected to cut their overnight rate for the second successive meeting as well, once more, right? So back in June, before that meeting in June, the overnight rate stood at 5%. They cut it by 25 basis points and bring it down to 4.75%. And they look like they're going to cut it by another 25 basis points once more. So that means we're quite likely to see the Canadian dollar or the loonie weaken even further. And that could be a strong bullish catalyst for the dollar CAD. All right. And we've also got PCE price index on Friday, 12:30 p.m. GMT. This is the Federal Reserve's preferred gauge of inflation. So should we see another round of softer than expected data, that is quite likely going to cause the US dollar to sell off on Friday as well. All right. Thanks everyone for tuning in to today's webinar. Right. Do look out for all upcoming webinars by IC Markets this week. Got a combination of live analysis and education as well. And I do wish you all the best in your trading journey. All right. Take care. Have a great trading week. And I'll catch you all in the next webinar.